Are you an anticipation trader or a confirmation trader? In today's video, I'll show you how I've been using confirmation trading to maximize my profits while minimizing risk. By using discipline and staying to a strict plan, this has allowed me to maximize profits in a bearish market despite hard to find opportunities. If you'd like to learn more about this strategy, then just sit back, smash that like button, and let's get into it. Alright, let's go over the key points. Both strategies require some form of support and resistance. Whether that's a 15-minute chart, 10-minute chart, hour chart, daily chart, whatever you use, this requires support and resistance. Also, confirmation trading focuses on the candle's close in relation to the area of interest. So we're going to focus on the candle closed, not the wick. So if it has a wick above our resistance, that's not a confirmation. Volume and price action is always our number one focus when looking into these trades. The first strategy we'll take a look at is anticipation trading. We just got HUSA hitting our scanners. It's about to make a new high of day. If I bought it here and I have a resistance just ahead, this would be an example of anticipation trading. I'm anticipating it's going to break resistance, hold, and make new highs. Come on, Houston, let's go. Get through that resistance. Come on, get through there. Yes. No. No. Wait, which way are you going? Okay, the anticipation trade just didn't work. Alright guys, I've got Houston at support level. No way it's going under 450. I'm going all in at 450 no matter what. Wait, what? What just happened? What just happened is you put all your eggs in one basket, anticipating the hold of support or break of resistance. Now let's go over the confirmation trades. With confirmation trading, we look for a close above resistance before making an entry to then hold as support. We need this resistance to break on a bullish candle paired with volume to then make a trade. Once we break resistance, we can look at resistance to then hold as support and then look at the next level or area of interest on our chart for our profit margin. This allows us a tight risk to reward setup where we can put our stop loss just below the previous resistance that we broke, now acting as support. By utilizing this strategy and staying strict with our discipline and not shaving too soon, we can see how we can maximize our profits even in a bearish market. Now let's see how that looks like in real time. First, we need to see a close above resistance. Okay, there. Now we need to hold that level as support and look at the $half level as a target. Okay, now we hit our target. We can choose now to sell the whole position, shave the position, or we can leave a lottery pick for further gains. This is a common day trade I perform every day in my own trading. Now I'd like to take a look at the stop loss and when is it time to bail on the trade. So in my opinion and my experience trading, there's 3 ways to go about your stop loss. You can 1, set it a dollar amount below your entry, 2, set it a percentage amount below your entry, or 3, you can use a candle close below support as an indicator to bail out of your trade. Of course, this will be very dependent on the size of your account and your risk tolerance. Sometimes I set a hard stop, a mental stop, or even a trailing stop loss. But no matter what, I always protect myself when I'm in the trade. If I'm using a candle that closes below support as an indicator to bail out of my trade, then sometimes I'll find myself actively trading and entering on the very next candle. So often what I'll see is it test support and break below, but then test as resistance and break back above. This is where the strategy gets a little tricky for beginner traders. In my experience, it's best to cut the loss once the red candle closes below the support level. This is an indication we may see lower lows. We can always enter back into our trade when we see it close back above that level, now acting as resistance. In this example, we can see we retested that level, offering an entry, and we can enter in this level in thoughts that it's going to now hold as support. If it doesn't hold as support, then this is where our predetermined stop loss will come into play. Let's take a look at a few from last week. Veru, Tested resistance, broke through, held as support. Great trade on that one. RDBX, another one that's been a little bit choppy lately, was nice the first few weeks, but now it's been used and abused. Broke resistance, held as support, gave a nice scalp, but then came back down to that support, broke below, closed below support, offering us an indication to bail out of our trade before the knife on RDBX. Here's another good example of when it didn't work. We broke above that resistance, needs to now hold as support, came back down and closed below that level or area of value. What's great about this is it allowed us to exit out of our trade and then look for it as a break of resistance to then enter and hold as support. In this case, it tested that resistance, didn't break, and fell back down. So we can be very happy with where we exited opposed to holding the stock for later losses. Now let's go over a few of the red flags to look for before entering your trade. Lack of volume when breaking resistance is a major problem. We need adequate volume to break through that resistance and hold as support. Often I'll look at the 1 minute candlesticks and the 1 minute volume sticks to see in comparison to the last 5 or 10 minutes how we're doing in volume. If we're increasing in volume, this gives me conviction in my trade. Another red flag for myself is if the flow is over 150 million shares. If the flow is over 150 million share flow, I may still take a trade, but I will keep in mind that algorithms will have more control on a stock with a higher float like this. And lastly, lack of breaking news. If the stock doesn't have breaking news, I will keep this in mind. I will still trade it on technical breakouts, but I'll keep it in mind, reduce my size, and tighten up my stop accordingly. If you'd like more strategies like this, feel free to join our free Discord today. I'll leave the link in the description below.